There's something about turning 60 that feels like a milestone, doesn't it? It's a time when many of us start to reflect on where we've been and where we're headed. Maybe you've retired, or you're thinking about it. Maybe you're finally enjoying the freedom to travel, spend time with family, or pick up that hobby you've always dreamed of. But here's the thing, while this stage of life can be incredibly rewarding, it also comes with its own set of challenges, especially when it comes to money. Let's be honest, financial decisions after 60 can feel a little daunting. You've worked hard to build your nest egg, and the last thing you want is to make a mistake that could jeopardize your financial security. And yet, it's surprisingly easy to slip up, especially when life throws you a curveball or when you're navigating new territory, like managing retirement accounts or dealing with healthcare costs. That's why today, we're going to talk about some of the most common financial mistakes people make after 60 and how you can avoid them. Now, I want to be clear, this isn't about fear or regret. It's about empowerment. It's about giving you the tools and knowledge to make confident decisions so you can enjoy this chapter of your life to the fullest. So, let's dive in, shall we? The first mistake we're going to talk about is one that might surprise you, not having a clear plan for your retirement spending. You see, many of us spend years saving for retirement, but when the time comes to actually use that money, we're not quite sure how to do it. How much can you safely spend each year? What if you live longer than expected? What if the market takes a downturn? These are all valid questions, and without a plan, it's easy to overspend in the early years of retirement and then find yourself struggling later on. So, what's the solution? Start by creating a realistic budget that takes into account your essential expenses, things like housing, healthcare, and groceries, as well as your discretionary spending, like travel or entertainment. Then, work with a financial advisor to determine a sustainable withdrawal rate from your retirement accounts. A good rule of thumb is the 4% rule, which suggests withdrawing no more than 4% of your savings in the first year of retirement and adjusting that amount for inflation in subsequent years. Of course, this isn't a one-size-fits-all approach, so it's important to tailor your plan to your unique situation. Now, let's talk about the second mistake, underestimating healthcare costs. It's no secret that healthcare becomes a bigger concern as we age, but many people are still caught off guard by just how expensive it can be. From prescription medications to long-term care, the costs can add up quickly, and if you're not prepared, they can eat into your savings faster than you might expect. One way to protect yourself is to make sure you have adequate health insurance coverage. If you're on Medicare, take the time to understand what it does and doesn't cover, and consider supplementing it with a Medigap policy or a Medicare Advantage plan. You might also want to look into long-term care insurance, which can help cover the cost of assisted living or in-home care if you ever need it. And don't forget to factor healthcare costs into your retirement budget. Experts recommend setting aside a significant portion of your savings for this purpose. Finally, let's touch on a mistake that's all too common, being too conservative with your investments. Now, I get it, when you're in your 60s or beyond, the idea of taking risks with your money can be scary. After all, you've worked hard to build your savings, and the last thing you want is to lose it. But here's the thing, if you're too conservative, you run the risk of not keeping up with inflation, which means your money could lose value over time. The key is to strike a balance. While it's important to protect your savings, you also need to make sure your investments are working for you. This might mean keeping a portion of your portfolio in stocks or other growth-oriented investments, even as you age. Of course, the right mix will depend on your individual goals, risk tolerance, and time horizon, so it's a good idea to work with a financial advisor to create a strategy that makes sense for you. So, there you have it, 3 common financial mistakes to avoid after 60. We've talked about the importance of having a clear spending plan, preparing for healthcare costs, and finding the right balance with your investments. But we're just getting started. In the next part, we'll dive into a few more pitfalls to watch out for, including the dangers of co-signing loans and the importance of keeping your estate plan up to date. Trust me, you won't want to miss it. For now, though, I'd love to hear from you. Have you ever found yourself facing any of these challenges? What steps have you taken to protect your financial future? Share your thoughts in the comments below. I always enjoy hearing from you. And if you found this video helpful, don't forget to give it a thumbs up and subscribe to the channel for more tips on living your best life after 60. Until next time, take care and stay financially savvy. Now that we've covered some of the foundational financial mistakes to avoid after 60, like not having a clear spending plan, underestimating healthcare costs, and being too conservative with your investments, let's keep the conversation going. Because the truth is, there are a few more pitfalls that can sneak up on you if you're not careful. And the good news is, once you're aware of them, you can take steps to protect yourself and your hard-earned savings. Let's start with a mistake that might not seem like a big deal at first, but can have serious consequences: co-signing loans for family members. Now, I know how this goes. Maybe your grandchild needs a cosigner for their first car loan, or your adult child is trying to rebuild their credit and asks for your help. It's natural to want to support your loved ones, and saying no can feel incredibly difficult. But here's the thing: when you cosign a loan, you're not just vouching for someone's character. You're taking on legal responsibility for that debt. If the other person can't make the payments, you're on the hook. And if you're living on a fixed income, that can put a serious strain on your finances. So, what can you do instead? If you're in a position to help, consider offering a gift or a smaller loan that you can afford to lose. Or, sit down with your loved one and help them explore other options, like finding a more affordable car or working with a credit counselor. The key is to protect your own financial stability while still being supportive. It's not always easy, but it's important to set boundaries when it comes to money. Next, let's talk about something that's easy to put off, but absolutely crucial: keeping your estate plan up to date. I know, talking about wills, trusts, and powers of attorney isn't exactly fun. But here's the reality: if you don't have a plan in place, or if your plan is outdated, you're leaving your family and your finances vulnerable. Without a clear estate plan, your assets could end up tied up in probate, which can be time-consuming, expensive, and stressful for your loved ones. And if you become incapacitated and haven't designated someone to make decisions on your behalf, the courts could end up stepping in. So, what should you do? Start by reviewing your existing documents, or creating them if you haven't already. Make sure your will reflects your current wishes, and consider setting up a trust if you want to avoid probate or provide for a loved one with special needs. Don't forget to update your beneficiaries on retirement accounts, life insurance policies, and other assets, as these designations typically override what's in your will. And finally, make sure you have a durable power of attorney and a healthcare directive in place, so someone you trust can manage your affairs if you're unable to do so. It might not be the most exciting task, but trust me, your future self and your family will thank you. Now, let's move on to another common mistake: falling for financial scams. Unfortunately, seniors are often targeted by scammers, and the schemes can be incredibly sophisticated. From fake IRS calls to phishing emails to too good to be true investment opportunities, it's easy to get caught off guard. And once you've been scammed, it can be difficult, if not impossible, to get your money back. The best defense is to stay informed and be skeptical. If someone pressures you to act quickly or asks for personal information like your social security number or bank account details, that's a red flag. Don't be afraid to hang up the phone or delete the email. And if you're unsure about an investment opportunity, take the time to do your research or consult with a trusted financial advisor. Remember, it's always better to be safe than sorry. Finally, let's touch on a mistake that's all too easy to make: neglecting to plan for the unexpected. Life has a way of throwing curveballs, whether it's a sudden illness, a market downturn, or a major home repair. And if you're not prepared, these unexpected events can derail your financial plans. That's why it's so important to have an emergency fund, even in retirement. Aim to set aside enough to cover at least 6 months' worth of living expenses in a readily accessible account, like a savings account or money market fund. And don't forget to review your insurance coverage regularly, whether it's homeowners, auto, or umbrella insurance, to make sure you're adequately protected. The goal is to have a safety net in place so you can handle whatever life throws your way without jeopardizing your financial security. So, there you have it, 3 more financial mistakes to avoid after 60. We've talked about the risks of co-signing loans, the importance of keeping your estate plan up to date, and the need to stay vigilant against scams and unexpected expenses. But we're not done yet. In the next part, we'll wrap things up with a few final points, including the dangers of overspending on adult children and the importance of staying engaged with your finances. In the meantime, I'd love to hear your thoughts. Have you ever faced any of these challenges? What steps have you taken to protect yourself? Share your experiences in the comments below. I always enjoy hearing from you. And if you're finding this series helpful, don't forget to give the video a thumbs up and subscribe to the channel for more tips on navigating life after 60. Until next time, take care and stay financially savvy. We've covered a lot of ground so far, haven't we? From creating a clear spending plan and preparing for healthcare costs to avoiding scams and keeping your estate plan up to date, we've talked about some of the most common financial mistakes people make after 60, and how you can steer clear of them. But before we wrap things up, there are a couple more pitfalls I want to touch on. These are mistakes that might not seem obvious at first, but they can have a big impact on your financial well-being if you're not careful. Let's start with a topic that's near and dear to many of us, helping our adult children. As parents, we want to support our kids no matter how old they are. Whether it's helping them buy a house, pay off student loans, or cover an unexpected expense, it's natural to want to step in. But here's the thing, if you're not careful, you could end up jeopardizing your own financial security. I've seen it happen time and time again. Parents dip into their retirement savings or take on debt to help their kids, only to find themselves struggling later on. Now, I'm not saying you should never help your children. But it's important to set boundaries and make sure you're not sacrificing your own future in the process. Before you write that check or co-sign that loan, take a step back and ask yourself, can I afford this? Will this put my retirement at risk? And if the answer is yes, it's okay to say no. Remember, your financial stability is just as important as your children's, and there are other ways to support them that don't involve putting your savings on the line. Next, let's talk about something that's easy to overlook but incredibly important, staying engaged with your finances. After 60, it's tempting to take a hands-off approach. Maybe you've hired a financial advisor or set up automatic bill payments, and you figure you can just sit back and let things run on autopilot. But here's the problem, if you're not paying attention, you could miss important changes or opportunities. For example, maybe your investment portfolio needs to be rebalanced to reflect your current goals and risk tolerance. Or maybe there's a new Medicare plan that could save you money on healthcare costs. The point is, your financial situation isn't static, it's always evolving, and it's important to stay involved. That doesn't mean you need to spend hours poring over spreadsheets or tracking the stock market every day. But it does mean checking in regularly, asking questions, and making adjustments as needed. And finally, let's talk about a mistake that's all too easy to make, letting fear drive your decisions. After 60, it's natural to feel a little more cautious about money. After all, you've worked hard to build your savings, and the thought of losing it can be terrifying. But here's the thing, if you let fear take the wheel, you could end up making decisions that actually hurt your financial future. For example, maybe you're tempted to pull all your money out of the stock market after a downturn, even though history shows that markets tend to recover over time. Or maybe you're so worried about running out of money that you're living on a shoestring budget, even though you could afford to enjoy yourself a little more. The key is to find a balance between being cautious and being confident. Work with a financial advisor to create a plan that makes sense for your situation, and then trust that plan, even when things feel uncertain. So, there you have it, 5 financial mistakes to avoid after 60, plus a few bonus tips to help you stay on track. We've talked about the importance of having a clear spending plan, preparing for healthcare costs, and finding the right balance with your investments. We've also covered the risks of co-signing loans, the need to stay vigilant against scams, and the importance of staying engaged with your finances. And finally, we've touched on the dangers of overspending on adult children and letting fear drive your decisions. Now, I know this might feel like a lot to take in. But here's the good news, you don't have to figure it all out overnight. The fact that you're watching this video and thinking about these issues is a huge step in the right direction. Remember, small changes can make a big difference when it comes to your financial security and your peace of mind. Before we wrap up, I want to hear from you. What's one step you're going to take to protect your financial future? Maybe it's reviewing your estate plan, setting up an emergency fund, or having a conversation with your adult children about boundaries. Whatever it is, share your thoughts in the comments below. I'd love to hear what's on your mind. And if you found this video helpful, don't forget to give it a thumbs up and subscribe to the channel for more tips on living your best life after 60. Because here's the thing, this stage of life is meant to be enjoyed. With a little planning and a lot of confidence, you can make the most of every moment without worrying about money. So, here's to you, to your financial security, and to living your best life at any age. Thanks for watching, and I'll see you in the next video.